War in the Middle East, a possible oil price spike, and rising interest rates. What does it all mean, and what does gold have anything to do with it? Well, I'm here to tell you that when we have these three factors, gold has surged in value in the past. When I say surged in value, I mean gold has tripled in value the past 2 times these events have occurred. Let me go through these past events and then we'll go through what is currently happening so that we can navigate the financial markets going forward. Let's take a look at history, specifically the early 1970s. The Vietnam War has wound down, the US is in a weak fiscal position, and inflation is creeping up. Bretton Woods has just been suspended by Nixon and gold begins to rally. In 1973, the Yom Kippur War starts when Arab nations led by Egypt and Syria invade Israel. Saudi Arabia then announces an oil embargo against the West, leading to a spike in the oil price. This caused high inflation and interest rates were raised to combat this. Subsequently, gold pretty much tripled in less than 24 months. A similar set of events occurred in the late 1970s, just a few years later, when Jimmy Carter was president. There was war between Israel and Lebanon, and the Shah of Iran was overthrown, leading to the Iranian hostage crisis, during which Carter banned all oil imports from Iran. This caused oil prices to more than double, leading to high interest rates yet again, and you guessed it, gold tripling yet again. This concoction of 3 factors, war in the Middle East, high inflation, and high interest rates, is what I call the golden trinity. When these 3 factors are present, gold surges in value, and it might happen again in over the next 24 months. I went over the golden trinity in my previous video, so please check that out. For now, let's move on to the current state of affairs. We have war in the Middle East involving Israel and Gaza, which looks set to be spreading regionally, with Israel already trading casualties with Hezbollah in Lebanon. Furthermore, Houthi rebels in Yemen just launched guided cruise missiles towards what appeared to be Israel before they were shot down by US anti-missiles. What is the common denominator here? It is Iran. Iran is funding Hamas, Hezbollah, and the Houthi rebels, which means there might be some sort of reaction from the West. Whether it is in the form of tightening economic sanctions or kinetic warfare, it would be bullish for both oil and gold. Meanwhile, Saudi Arabia is stuck in the middle, but it's unclear what action it'll take, if anything. When it comes to the price of oil, it's been rising over the past 2 weeks and it looks set to rally further as tensions continue to flare up in the region. On the supply side, OPEC has already promised to cut production this year, and China's oil demand is starting to show signs of recovery. Also, American rig counts have been declining this year, and the American producers have little interest in ramping up production, considering they have been raking in the cash over the past few years. On the interest rate side, long rates continue to go up, with 10-year rates at the highest they have been since 2007. So that is what has been happening now, but what is going to happen going forward? The Israel-Gaza war could escalate into a regional conflict involving other groups. The clear ones are Hezbollah in Lebanon, Palestinians in the West Bank, and the Houthis in Yemen. Also, don't count out Iran. Any attacks by it or against the West could trigger things to escalate rapidly. In the event of that happening, expect crude oil and gold to break out to new highs. A ceasefire between Hamas and Israel is unlikely given the aggressive rhetoric coming out of the IDF and the far-right Israeli war cabinet. When it comes to bonds, long rates continue to rise with 10-year yields at nearly 5% now. I actually think the rise in long rates is due to 2 reasons: the Chinese dumping treasuries and the market pricing in the increasing risk of stagflation. First, the Chinese. They held over $1 trillion in US treasuries last decade, but they've been steadily selling since, with even more aggressive dumping of treasuries over the past 12 months. This may serve to shore up the yuan, which would put downward pressure on the US dollar, which in turn is good for gold. Now, stagflation is something the market is not taking seriously. The legendary investor Paul Tudor Jones recently said that the US is in the worst fiscal position since the end of World War II. He goes on to say that this will continue to put downward pressure on bonds and lead to more bond issuance, more dumping of bonds, and therefore higher rates. This, combined with an anticipated slowdown in the US economy, could increase the chance of stagflation. This means higher interest rates, which in a stagflationary environment would be good for gold. Speaking of gold, where is it currently? It's been subdued over the past 3 years after peaking in 2020. However, given US dollar strength over the past 2 years, gold should be a lot cheaper. This indicates that there is strong underlying demand for gold. Indeed, gold's been actually basing over the past 3 years, and the current rally could lead to a huge breakout. But it needs inflation to tick back up. And the biggest driver of inflation currently is oil. Oil is also undergoing a rally due to a combination of geopolitical turbulence and supply-demand dynamics. On the supply side, OPEC Plus has already said that it will cut production this year, and US rig counts remain subdued. On the demand side, China is slowly beginning to recover, and its imports of oil appear to be increasing. A further escalation of conflict in the Middle East would surely cause a further rally in oil and therefore trigger a rerun of inflation. So there you have it, folks. We already have two pieces of the golden trinity: war in the Middle East and high interest rates. The only thing missing is rampant inflation, and we might get that soon. But to get there, we need higher oil prices. It appears to be on the horizon, but who knows what might happen in the near future. We need to take these events day by day, but I wanted to show you what has happened in the past so that we can make sense of what is going on now in order for us to better position ourselves going forward. I hope my video has been of value to you, and if so, please hit that like button and subscribe to my channel for more content. Until next time, happy investing.